Hey guys, what's good? I'm Andre and today I want to have a look at natural gas with you guys. I've seen a couple of folks asking about it and it seems to be quite interesting on YouTube, so I decided to make a video here. And you know what? I've also decided to start off a very clean chart, and I challenge you guys to start off of a clean chart and do some technical analysis on your end. Pause the video right now, do it on your end, and send me a screenshot of what you guys have drawn in. First off, I think it'd be a really interesting experiment of what everybody kind of sees, and it will help each other see what the others see. And then it also helps you, if you're more of a newbie, it helps you see how you compare against what I'm drawing in here, just so you can know where your areas of improvement lie. Now, the very first thing that I would probably do with regards to this chart would be to draw a horizontal support area over here at roughly $2.15. I think it's a really important area. Sure, you can draw it higher or lower. What I tend to do most times, however, is just to draw it thicker, just so I can look at it as a zone, not as a line. Next up, let's have a look at what else we can do here, guys. And before I draw anything else, actually what I want to point your attention towards is, first off, the CCI indicator. This is called the Commodity Channel Index. It's something that I frequently use for trading commodities. It just indicates oversold and overbought conditions pretty fairly well. As you guys can see, we are looking for over 100 and under minus 100 for the overbought and oversold conditions. We are working off of an oversold condition here, which I think is a good indication. What I don't love right now is the MACD, but if we close today green, I will absolutely be enamored with the MACD, because it might make what is called a zero line reversal, which is usually a very bullish sign. I want to go back on the weekly, guys, and I want to show you two moving average that I'm using for a long time, the 18 and the 40. These are the work of Joe Rabel, and he's kind of perfected the work of Lowry and a couple of others. But anyway, I'm using the 18 for trend basically, and then the 40, it also kind of simulates on the weekly, it simulates the 200-day moving average. So it's easy for us to just use two trend lines but have an idea of the 200-day while we look at the 40-day and the 18-day and the 18-week as well. Cool. So with that said, I also wanted to show you guys the MACD over here on the weekly, which is looking pretty healthy. It's working off of an oversold condition. So is the CCI indicator on the weekly again. I know this kind of looks like what could potentially become a bear flag, but I don't love the initial spike over here. So I think it's not a bear flag. I think it got invalidated by this initial spike. Otherwise, it could have been a bearish flag on the weekly. Moving back to the daily here, guys. Again, we looked at the MACD and the CCI. What I also want to highlight here is that we are forming a bit of a trend line over here with these previous three swing lows that we've had. I think this is good enough for us to be able to trade off of. And if we clone this and we take it above over here, I would probably place it something either along these lines and treat it fairly on the daily, or place it a bit higher up and take a look at the weekly to see how it aligns. And as you guys can see, it's a pretty fair trend line on the weekly, so I'm probably gonna end up holding this one and just giving this a bit more room for potential running. Now, obviously, if you zoom out here, we are pretty sold off. I think that we have probably been pricing in the worst basically. Let's see how it goes. And obviously NatGas is something that's easily driven by headlines and news stories and supply demand, but I'm somebody that usually trades off of technicals. The technicals here make sense. I think we are about to create some sort of a bottoming formation. Something that I also wanted to show you on the weekly, guys, with regards to the moving averages, was that the 18, after a long while of selling off aggressively, the 18 moving average is starting to cup over and it's starting to move sideways, as you guys can see here. I think this is a pretty bullish sign, and if we can start trading above it so that the 18 can start helping the stock instead of beating the stock down, blowing some wind in the sails of this commodity, not stock, I think it's gonna probably be a lot better for our overall setup here. That being said, I still love the fact that the 18 has managed to start trading above the 40 on the daily time frame, and I think this is a really good sign for improving trend to come. The last thing that I want to show you guys here is the ADX. So I'm sometimes using the ADX as well. Now, what I'm usually looking for in the ADX is just a period of low ADX conditions. So under 25, the yellow line needs to be under 25. And ideally, I would like both the DI lines to be under 25 as well. For now, the red DI is slightly above. So what I will be looking for here is for the green DI to start trading above the 25 level as well as above the green DI. And if we can break this previous peak of the red DI with this green line, that's gonna be even better. Ultimately, we are hoping to see the ADX line break above 25 because that means that price is trending. Right now the price is not trending, it's trading in a sideways manner. So if we can get that break above, that's gonna be fantastic. But even without the ADX, guys, for now we're just looking at price action, and I think I'm liking what I'm seeing here. I think this is a good risk to reward trade that you can take a long position here. If you enter here, as I was saying, guys, with a stop just beneath the previous lows over here, we have a potential 2.5 to 1 reward to risk ratio, or 1 to 2.5 risk reward ratio, which is not too shabby at all. I think you can be a bit more scroogey, but just make sure you don't get stopped out too fast. But you can potentially place your stop just beneath the wicks of the last couple of candles here, and the take profit can be previous swing high, and that's gonna give you a 1 to 3.5 risk reward ratio. Anyway, this is my take on natural gas, guys. I post a lot of free content. I'm on my Patreon, and for just $5 you can get even more quality content and insights and potential trade setups. So I encourage you to check it out, and I'm gonna catch you guys around. Like and subscribe if you enjoy the content. Take care.